If we're getting comfort on the inflation side and the Fed's reaction function toward inflation, it is a matter of making sure that growth doesn't slip further from here. So far, it's in a fairly comfortable zone. We got weekly jobless claims tomorrow, and it's going to maybe start that phase.
They always clap down here, of course, at the close, but perhaps today it has a little more meaning as the bell rings, because we've had another record setter on Wall Street. All three of the major averages, new closing highs. That does it for us into 8
Closing at the highs and record closes across the board as the Dow, NASDAQ, and S&P all finish their highest levels ever. It's the first record close for the Dow and S&P 500 in 48 days. And that is quite the scorecard on Wall Street, and winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
Well, coming up today on the show, a crucial component of the CPI report, shelter inflation, ticking a bit lower in April, or not growing as quickly, we should say, according to today's data, but still up 5.5% year over year. We're going to talk to the CEO of Invitation Homes about his read on the housing market.
And today is the deadline for 13F reports. We're going to bring you the latest update on holdings of some of America's most well-known investors as we get those this hour. Plus, $200 billion tech conglomerate Cisco due to report earnings in just moments. We're going to bring you those numbers as soon as they cross.
We begin with the markets and record closes for the three major averages following a softer than expected CPI print. Joining us now, Barbara Duran of BD8 Capital Partners and Eric Friedman of U.S. Bank Asset Management. Great to have you both on a day where we have these record closes for the three major averages as well as the NASDAQ 100. Barb, I mean, you've been pretty bullish over the longer term. What do you think about the market at this level right now, given the fact that it has been so risk on, largely due to data that's been, I guess, bad news being good news? Can we call it that yet?
Right. Well, I think this is a continuing bull market, and there's going to be a point, I don't think we're there yet, where in the short term, we're going to start to question, like we did in January, February, is it overbought? How much more can we go? But the fact is, if you look at what's happening in the economy and with interest rates, I mean, the PPI number yesterday was disappointing, but then you had a revision down in the March number. Today's CPI was a nice, pleasant surprise. Fingers were crossed, and we got our good CPI number. And that's really what spooked the market in April. Was the worries that the Fed would have to, the inflation was going to resurge, but which I frankly don't see how that could happen since so much was driven by supply chain issues. And wage increases are still up but coming down. So I think we're in very good shape, and earnings are what we're going to start to focus on now. We're going to wait. We have another few prints to come in over the next months on inflation, but earnings were good in the first quarter.
Hello, welcome to my YouTube channel. I'm here, Capitolu. We look and cover the Cisco, the play that we have this afternoon. We're looking at 5 minutes chart, which is mid of the afternoon. Print this block over here. There's two blocks of buy positions. Also, let's take a look on the flow here, and let's take a look at Cisco. See if we have any here. Cisco. No, that's CO. And let's take a look. So close towards the end, it was more neutral. 1.40 million on the buy side and 1.41 million, 28 bets on the sell side. Let's click over here. We got this buy put, 47 put, yellow, $22 for Friday. On the buy side. And the sell side is bearish, buy side very bullish, but buy also they have this sweep buy puts, stick out the puts just to call. Everybody in the 49.5, the last minute 359 for the 24. And this strangle 45.52 and 140. So let's see. Overall is neutral, but on my indicators and everything that I did a midday video, was like showing double bottom and blocks over here on the buy side, PCI on the volume, and also on the open interest. Everything was like a bullish, and there we go. Probably the money it was out, I think 5%, going to 5.552. Gonna retrace a little bit. CNBC not yet with earnings. Remember, I think we saw. I'm gonna bring over here this page. Actually not here. Let me close this one, and let me open this one. Another thing, like we're on the bull side, Nasdaq, QQQ, and so also SP 500. We're in the bull side, so kind of like definitely bull. So we saw this gap from 52 down here to 49. Kind of like it was filling the gap over here. But then kind of like went down, and it forms the double bot over here. So going crazy right now. Let's see what's the numbers. I cannot see the numbers because let me see here. Still talking about, there we go.
Hi, Morgan. Well, the networking provider Cisco posted an EPS, earnings per share, and revenues beat, helped by its recent acquisition of cybersecurity firm Splunk. So Q3 EPS came in at 88 cents a share with revenues of $12.7 billion. Splunk added roughly over $400 million to that line, but still a beat. You can see shares reacting quite positively. And with only 1 quarter left in their fiscal year, they were also able to beat Q4 expectations with an EPS range of 84 to 86 cents, and then Q4 revenues of a range of 13.4 to 13.6 billion. In the actual release, Cisco's CFO saying that customers are consuming their inventory now and they are seeing, quote, stabilization of demand as a result. That was an issue over the last 2 quarters. The company also naming Gary Steele, who is the CEO of Splunk, as the president of Cisco's go-to-market, effective immediately. Reaction positive, over 4%. Guys?
All right, Christina Partsinevelos, thanks. Barbara, I'll go to you on this one because you had a beat on the top and bottom lines. You had current quarter guidance coming in better than expected, but perhaps most interesting is that commentary about customers consuming inventory and the stabilization of demand. It goes back to this notion that perhaps the bar was low, or certainly had been lowered coming into this print.
Well, I think the management did a great job of that. And this is the 5th quarter in a row, by the way, that they have beat their EPS and their revenue targets. So this, in my view, is not unexpected. But they had set the bar. The last 2 quarters, they have cut estimates because they are in sort of this lull. I mean, they had a big backlog issue because of their own supply issues during the pandemic. So when things opened up again, they got all that backlog out. Right. So that sort of bumped up the growth beyond what it normally would be. And right now, the expectation, I'll be interested to see what they to hear what they say on the call. Orders are expected to be down 10 to 15%. So the bar was so low. I mean, you had 14 different estimate cuts in the last 3 months, 11 different revenue cuts. So there really was hard to see what the negative aspect would be. And so it was, I think the risk reward going into this was very good.
All right. I love that you had those numbers to trot out right there, too, for a little bit of context. Barbara Duran and Eric Friedman, thanks for kicking off the top of the hour with us with record closes for all the major averages. Well, Netflix shares getting a brief pop late in the session on some new user data and advertising.
All right. We are back. So on the don't worry about Netflix right now. So on this one that we looking at, and even the commentator over there say something about the downside on so much downgrades. But actually, like they have much more upgrades than any other stock that I saw recently. The double bottom here was very kind of like set up. And also, like when you have a gap and a downside, this gap needs to be filled. So the price gap right now, it's close to 53.23. So actually, I even like did it like a 7.69%. That would be like to fill the gap pretty much on that situation. So it's right now we are between this indicator over here, kind of like, let me bring to you guys. Let me see. Okay, this is the support resistance, and it was kind of like blinking between support resistance and the 4 hours right now. Let me make this bigger. Right now it's probably like it's trading between support resistance. Let's go into 2 hours. Two hours. No, it has to be the 4 hours. There we go. Now the 52.21 is become like a resistance at this point in a 4 hours chart. But actually, this was the big red. I have a draw, and this one kind of disappear at this point. It don't exist anymore. But we need it's 53.22.23 to fill the gap in this one. So hopefully we go through this resistance, which probably could be like in a day. Let's take a day chart. Not even close. No, actually, yeah, right there. So we are right here on the day chart right now, kind of like was acting as a resistance. So let's draw a block here. That way we can see it at this point. What is the situation? So this would be the day block. Come on. Day block. And alright, yeah, that would be the second block, which is this one. And this one is 53 something. Okay, so this is the day chart. Let's go back to the 4 hours. So this one doesn't exist anymore. Let's delete. The 4 hours is gone. So now we have the day chart right here. It's a day. Let's make it smaller. Too big. Let's make it like 12. And let's move this one inside. So now in the day chart, this 52 is acting as resistance, kind of holding the price at this much. This candle, it's only 4%. It's not gonna be good for some of my plays. Let's take a look on that. Let's bring this one. Let's see the save trades. Cisco 5250. So yeah, 4%, 198 tomorrow. Maybe, yeah. If it holds that, we are good. If we go higher, it should be better. And hopefully go higher tomorrow, unless Walmart actually, like, you know. All right. That's what I'm saying. 52.40, 241 for tomorrow. If stay at 23%, we probably, because this is like for June 21st. IV is not going to change as much. It might stay at this much because it went up. Play call, which is the contract value probably going to be somewhere around between $140 $160. But if you busted this two like sell positions or short positions, and we go back and visit like the top, which is past this second one, the top is 55. So the all-time high, look on the day, let's take a look on the weekly. And the weekly, we have another one here on top. Can now see it. 56. Okay, 56 was the all-time high. So we are $4. It'll be over 10% to hit the price. Let's go back, see what they say.
Something like 600 million at close today. Shares are shooting higher. They're up 46% right now. Back on Earth, new data out today on the housing front. The National Association of Home Builders survey showing a decline in builder sentiment. It's the first since November, marking the second weakest level of the year. Meantime, shelter prices, those were up 5.5% in April from a year ago, which is down slightly the pace of growth for March, according to the CPI report we got this morning. Joining us now exclusively, Invitation Homes CEO Dallas Tanner. Dallas, it's great to have you back on the show at a time where everybody is so focused on rent prices and the pace of those rent price increases, as we do see the reading in CPI where it's outsized and we know it's lagged. What are you seeing in real time across your portfolio, which really spans most of the country?
Yeah, it's a great question. I mean, we just had our earnings call, and while you're certainly seeing things moderate, pricing's still elevated. Demand's still really high. Our business today is about 97.5% occupied. We're seeing rent growth in kind of the low fives were the numbers that we shared for April from a blended basis. So there's still really insatiable demand. It all comes down to lack of housing supply, as you and I have talked about in the past. I think we've got to address some of these challenges. We need better access to supply for the marketplace. And while it's nice to see things moderating, supply is still certainly cramped. And so I think we're going to see additional pricing pressure on housing and housing costs for most of this year.
It's interesting to hear you say that. I mean, what do you think it's going to take to see, as you talk about moderating, what do you think it's going to take to see actual stabilization? And I ask that knowing that you are a buyer in this market, too, in some cases going straight to the builders themselves to strike deals to create more inventory for your own customers.
You're exactly right. We are hyper focused on trying to create new housing stock. We have a couple thousand units somewhere in the production line right now, and that will deliver to mostly Sunbelt and Southeast markets. That's been our focus. We're going to lean in on that strategy and continue to partner with really great public and both private home builders that want to create this additional scale. It takes a balance sheet and it takes a focus. And so we're going to use Invitation Homes and its balance sheet to really focus in on creating some of this new supply. It won't solve the problem, but we've got to do our part. I think the other thing you need to start to see is resale supply come back into the marketplace. We've talked about this in the past, but the reality is you have this rate lock situation where a lot of people are in a pretty affordable mortgage. And if you look at the bid-ask spread right now between what a new mortgage cost is relative to leasing or staying in your home where you currently have a mortgage, it's a huge differential. And so we're certainly seeing that in our customer profile. They're continuing to stay longer and longer and renew it at pretty favorable rates.
Dallas, what do you expect is going to happen to all of this rental stock when the housing market eventually normalizes?
Well, to be clear, I mean, we've seen since 2016 less single family rental available in the marketplace over the last, call it 7 or 8 years. There's definitely been a focus on building some more kind of scattered site, smaller, what they call BTR product out on the periphery. Most of it's getting absorbed just due to the lack of supply. I do think one area that is of focus for people that are leasing right now that's been extremely beneficial has been you can build positive credit while you're leasing. We have over 190,000 people in our homes right now that are leasing and building credit. We've seen average credit scores bump 33 points over that period in the last year.
All right. That's major. Dallas, thank you. CEO's
Thanks.
invitation home. Well, we're getting the first batch of 13F reports. Let's get to Leslie Picker with details. Leslie.
Hey, John, yeah, they're coming fast and furious, and with some news to boot. You've got the mystery name revealed by Berkshire Hathaway. It is revealed as the insurer Chubb. You can see shares of Chubb had spiked upon this 13F filing in aftermarket trading. There you go, up 5% right now. It's come up down a little bit, but still gaining about 5% there. Berkshire revealing a $6.7 billion stake as of the end of the first quarter, representing about 25.9 million shares. And just a reminder, Berkshire had been purchasing in the third and fourth quarters of last year, but was allowed by the SEC to keep it confidential as it was building its stake. So mystery name revealed, Chubb, $6.7 billion stake. Other news from the Berkshire filing, sold out of HP. That was about a $700 million position last quarter. We also saw that Berkshire pared back 88% of Paramount Global in the quarter, and they must have sold the rest in the 6 weeks since, because during the shareholders meeting, if you recall, Buffett said Berkshire sold its entire stake at a loss. Turning also to Appaloosa's 13F filing, some interesting moves in Chinese tech here. Alibaba, that firm upped its stake in Alibaba, nearly tripled, up 159% to $814 million. So sizable move there. Upped Baidu by 188% to $190 million, and also took a new stake in JD worth about $100 million at quarter end. Also, Appaloosa took a new stake in Boeing. An interesting move. It's about $43 million at the end of the quarter. Relatively small compared to its overall portfolio, but noteworthy because it's Boeing. Also kind of pared back some big tech names. Pared back Meta by 39%, pared back NVIDIA by 44%, and pared back Uber by 77%. Of course, these are all positions as of the end of Q1, as of the end of March. They may have shifted in the 6 weeks since, but they are a snapshot of kind of how some of the larger managers traded their equity holdings during the first quarter, guys.
Always interesting, if backward looking, insight into how these billionaires are trading. Leslie, thank you. Well, fintech firm Brex landing at the number 4 spot on this year's CNBC Disruptor 50 list. And up next, the company's co-CEO is going to join us with his read on lending and spending and how the company's using AI for everything from corporate expense reporting to fraud detection. Overtime, we'll be right back.
All right, so if we stay that way, even it's a little, take a look on the day right now. It didn't show me the percentage. Let me see the 4 hours. Still 4.77%, hitting all the way up here to close to the 7%. But this resistance, which I show you guys, it's in a day. Take one off. The day chart, kind of like holding a resistance. But my play was fill this gap on a 7%. So saying that, thanks for following the channel. OptionsTrade Ideas101 created this name based on my research. You can follow, but it's all on you. So I'm using option strats to see what's the best play sometimes and see like in the flow. It's very like completely complete web page and also app that you can take a look. Flows over here. Now they come up with a lot of stuff. Flow summary, live flow, historic flow, news flow, congress flow, inside flow. So go live, and then you can just go like see what's going on at the live, but also you can go and see like a specific. So you just put the tick over here, and then it kind of show what's the situation. So all this YOLO here was burning to death. They're gonna lose all the money, so it's about close to $100,000, and as far right now, pretty much. Even so, because it's already up like little B up 4% maybe. So yeah, that's 47. So it's 52, 51.92 now. It could be like trade 52, something like that. 52.19 is the resistance. We might gonna bust it there because it hit all the way to the top. We still have the call coming up, and so anything good in a call should be good. All right. Thanks for watching, and see you guys next time.